So now let's get started with the markets. SpaceX listed on NASDAQ on June 12th, raising $86 billion for the company's long-term ambitions at a valuation of $1.77 trillion. That's the largest IPO in the history by a wide margin. Shares dropped and within days of the market value crossed $2 trillion. Elon Musk became the first trillionaire on paper. But soon after, the firm's shares started to reverse the rally. SpaceX shares fell for a third straight day on Monday. The stock fell 16% on Monday, shedding more than $600 billion in market value. The decline follows a retreat of more than 8% on Wednesday and Thursday before the U.S. market closed Friday for the Juneteenth holiday. That fall comes after the company turned to bond markets last week to raise fresh capital, part of what's expected to be a massive borrowing spree. SpaceX IPO comes in the middle of an intense AI bubble anxiety. Bridgewater's Ray Dalio says that his indicators show markets rising close to the same level seen in 2019-29. JP Morgan's Jamie Dimon has flagged a higher chance of a serious stock pullback in the next 2 years. Goldman's own equity research head has openly questioned the AI trade. Now, AI-related firms drove roughly 80% of the U.S. stock market gains in 2025, and the top handful of tech names now make up the same dangerous concentration of the S&P 500 seen at the dot-com peak. A crash on that scale today could wipe out about $33 trillion. That's more than the US GDP. SpaceX itself isn't a pure AI bet. Starlink is profitable and growing, but its XAI arm is burning cash fast, with AI segment R&D costs up over 300% in 2025. That's the AI story in miniature. Real infrastructure, real losses, and sky-high faith. Is SpaceX the top signal? No single IPO works that way, but it is the clearest test yet of whether investors will keep paying record prices for AI exposure or whether this is where the exuberance finally runs out of road.